All right, so we're ready to rock, guys. We're going to continue this webinar series. If you guys are listening on social media at all or in the trade room, just let me know if you guys can hear me okay. I'm going to continue going. If you can't hear me, let me know. I just don't want to keep going if you guys can't hear me. So before we begin, just kind of do a quick recap. Again, repetition is the key. I saw a YouTube comment today from somebody that said that they liked the repetition, especially with the candlesticks. And I was like, good, I'm glad they like that because I don't know how to not repeat myself. So if you like repetition, it'll be good. If you don't like repetition, you probably won't like this. But guys, with candlestick, it's again the most important trading indicator. So this stuff, it takes repetition over and over and over and over again for this to make sense. So we're going to look at a few things here today. First of all, this is going to be a continuation of a video series or webinar series I'm doing for you guys. I'll put the links below in this video, but if you want to catch them ahead of time, you can go over to our YouTube channel, Bullish Bears. Just type in Bullish Bears up here, and you'll see my previous ones I did recently on star patterns, reversals, trend lines, and flags riding the 9 EMA. So again, I'm going to use the same charts so they just start to become familiar to you, because once you see them on one or a couple charts, they're going to go to all the other charts that you go basically looking at, So, I mean, that's why I'm also giving you guys a combination of, low float stocks as well as, tracking the SPY. So you can see how these patterns form on larger securities as well as small cap. All right, so this is where you can find those videos. I'll also, depending where you're watching this replay, I'll put the videos in the description. Also want to draw your attention to, we've been showing you guys these wallpapers. We have 3 custom-made wallpapers which explain all the different major or most popular candlestick patterns. And as I was kind of showing you guys in my video yesterday with star patterns, you're going to see many of these patterns start to look the same after all. Remember, many of these patterns start to look the same, as you progress and you start seeing them on the charts. And many of times, something will be something different, but it's telling you the same story. Like we were talking about yesterday, morning star and evening star patterns, they could look like, Harami patterns, right? So again, it's just the placement of the candlestick. The doji or the spinning top might be above or below the previous candlestick. Whereas with Harami patterns, today we're going to talk about Harami and engulfing patterns. You'll see the placement of the candlesticks a bit different, but it's telling you basically the same type of story, right? You're going to see kind of a reversal upwards with bullish Harami, a reversal downwards with bearish Harami. If you look at it, the candlestick's just inside of the previous candlestick, whereas, with the star patterns, it's below. That's with Harami patterns. Now, the word Harami means pregnant in Japanese. So with a bullish Harami, you could picture just a woman here in her belly. So, bullish Harami. And I was trying to think of an analogy for bearish Harami, because a woman's belly is not where her face is. So just, I guess you would say, flip her upside down or have her do a handstand, right? So that's where, the Harami would be. So it's a smaller candle inside of it. So in a bearish Harami, it's a bullish candlestick up, smaller candlestick, bearish one on the inside for a reversal downwards. Bullish Harami is a bearish candlestick down, smaller bullish candlestick inside. Again, think of a pregnant woman, Harami, and you'll see it's a reversal to the upside, right? Now, remember I was telling you guys these patterns look very similar? Look at the engulfing patterns. Bullish engulfing and bearish engulfing is just very similar to Harami. It's just a little bit different. So bullish engulfing matches up with bearish engulfing. It's just a smaller bearish candlestick that's engulfed by a bullish candlestick, which is showing you a reversal upwards. A bearish engulfing candle is a smaller bullish candlestick that's engulfed by a bigger bearish candlestick, right? And that's to the reversal down. So when you look at these, right, they look very similar. And if you put it together with the star patterns, they're very similar. It's just the placement of the candlestick, but they're still, it's going to do one of basically two things. Price is going to either go up or it's going to go down, right? So with a bullish Harami, I'm going to show you real patterns and charts, or on a chart, but a bullish Harami right here, it's a long strategy play. So you'll see a smaller bullish candlestick. You would take an entry at the break above the bullish candlestick, put your stop below, and obviously we've been teaching you guys candles and patterns and trend lines, all that stuff. So we're gonna, again, I'll show you what this looks like with trend lines and stuff. So this is a bullish Harami. This is how you would trade a bullish Harami. Bearish Harami, it's a smaller candlestick inside of a bullish one. You would take a short at the break below this candlestick with a stop above that second candlestick. Bullish Engulfing, you take a long position as price breaks above the bigger green bullish candlestick. You place a stop below the bullish candlestick. And with Bearish Engulfing, you take a short as price falls below the bearish candlestick, and you put a stop above the bearish candlestick. So I will show you what this looks like now on real world charts, and this is where it's going to start to get exciting because as you guys will see when I start showing you on the charts, I just do over and over and over. Repetition is the key. Again, if you want to know how to find these wallpapers in our candlesticks ebook, just go to our website, bullishbears.com. Start your free membership here. We'll email you our candlesticks ebook and our wallpaper backgrounds. If you're logged in and you're already a member, you could just go right under courses and find it right underneath both of our candlestick patterns and reversals courses. All right, so let's go back to the trusty SPY, right? You're gonna see things a little different. So let's go back to this video. I had this to show you guys. Remember we talked about this one in the how to trade single candlestick reversal patterns. Remember we were paying attention to shooting stars and dojis and spinning top candles, right? Now we're going to start looking at that stuff a little bit differently, looking at the SPY. That's a monthly chart, right? I also did some videos showing you guys the daily. Now we're going to look at Harami patterns and engulfing patterns, right? So bullish Harami, you're going to see two bullish Harami patterns right here and a bearish Harami. All right, let's explain it first, and then I'll show you what that looks like in conjunction with trend lines. So a bullish Harami, we're going to just talk about entries and exits here. So actually, this is what I want to show you something. This is very important. Remember what I was telling you guys is sometimes a candlestick it'll be different. So a bullish Harami is technically a bearish candlestick followed by a bullish candlestick for a move upwards. We'll look at right here. It's got a bullish candlestick followed by a smaller candlestick in here. Actually, I want to change this because I believe that's called the bullish homing pigeon. That's very important. Bullish homing pigeon. I believe that's actually what it's called. So I actually don't think that is a Harami. I think that's a bullish homing pigeon. But again, guys, right? Telling you the same story, right? So this right here, you would trade it just like you would a bullish Harami. When price gets above that second candlestick, you would take a long as price breaks above, close below it as your stop. Okay, so this is a bearish Harami right here. So actually, what am I thinking today? I'm an idiot. I think this is actually, let me correct myself, a bearish Harami. Guys, I tell you, right? So I've been staring at candlestick patterns too much. Bearish Harami. Oh, yeah. I'm confusing myself today. But hey, guys, if I'm confused, right, what do? I just go back to our wallpapers. And right here, bullish candlestick with a smaller reddish one. And that's what it is. So now that I've confused the heck out of you, it's actually a bearish Harami, just like it was up here, right? But that's what I meant to tell you guys. So this is a bearish Harami fake out, basically, or it broke out. You know, a bullish bearish Harami failure. That's what I wanted to say. I knew what I was trying to say, but I couldn't get the words out. So meaning, remember I was telling you guys, most of the time, a bearish Harami will fall to the downside. Well, in this case, it went to the upside, right? So let's talk about bearish Haramis. Let's just remove this, and we're going to start over. Now that I confused the heck out of myself. So with a bearish Harami, you're going to take a short below this candle. You could also call this, again, guys, this is where it gets really crazy. You could also call that potentially tweezer tops. Look, so a bearish Harami also has kind of tweezer tops inside of it. Two co-equal tops. You guys notice that? And now tweezer bottoms. So now actually that just reminds me, I'll probably do videos on those, but do you guys see the similarities? The bullish candlestick is almost inside of the tweezer bottoms. It's not going to always be that way, but you can see it's almost like that. It looks similar to a bullish Harami. Tweezer tops, you can see the body of that candle's inside the bullish one. It's kind of like a bearish Harami pattern. You guys noticing that? Does that make sense to you guys? Excuse me. So going to this now, you can say this is like a bearish Harami or tweezer tops, telling you a very similar story, right? Even this bullish Harami, that's a bullish Harami, but it's almost like tweezer tops as well. Guys, that's the thing with candlesticks in the real world. They're not always perfect, but that's where you got to just look at candlesticks and see, you know, what's one candlestick telling you, what's the next one telling you, what's it telling you together, and what's the third candlestick going to do, right? For reversals, and then it makes up bigger overall patterns. So with a bearish Harami, you would take a short below this red candlestick, close above it as your stop. Again, don't just trade it. You have to understand what it's in relation to. This one actually makes a lot of sense because it's right at resistance. So if it's failing this resistance at that 20 EMA, that would make sense that it wants to reverse down. Now, this bearish Harami, you would think it actually makes sense that it would want to potentially fail here as well. You can see bullish candlestick up, bullish candlestick, smaller bearish one inside. You would think it would want to reverse down here because it's below the 9 EMA and fail. But what did it do? It broke out. So typically, you would have taken a short as price failed this down, candlestick close above it as your stop. But look, you know, it faked people out and, you know, this would have been a potential long position. So that's a perfect example of how a pattern fails, right? So typically, though, with bearish Haramis, you would go short, and with bullish Haramis, you would typically go long. Now, with a bullish Harami right over here, we're going to start talking about that one right now. Let's remove the drawings. You can see smaller or a bigger bearish candlestick, kind of an equal. This is where, again, it's not going to be perfect, guys. You know, this is where I was going to say, is that a bullish Harami, or is it tweezer tops, or is it tweezer bottoms? Look, there's kind of co-equal bottoms. So there's kind of equal bottoms, there's kind of equal tops, and then there's a candlestick inside, right? So that's why you don't guess. You decide by putting together what I'm about to show you guys, again, with trend lines, you know, what is price looking to potentially do? So with this one right here, you would potentially go long as price breaks above this green candlestick with a candlestick close below that green one as your stop. Sorry guys, I got to drink a lot more water today. I made a huge breakfast this morning, so I'm super thirsty. I think I had a lot of sodium in it. So if I have to take a lot of drink breaks, that's why. So that's how you would trade a bullish Harami. We're going to look at several other patterns, but now let's put this together here and let's see why it's doing these patterns. When you connect these trend lines, right? Connect the bases, right? Remember, I've been showing you guys connecting as many valleys and peaks as possible, right? There's support, and then going back over, you know, kind of in here or right back in here, you can see it's a rising wedge pattern. So price, you know, as it's kind of hitting this resistance, that's why this may have, again, it didn't break above and out of resistance, so it fell downwards. Now, this is what's interesting. You know, this is a bearish Harami that hit resistance, but then it actually held support and it broke out. Now you have this crazy looking bullish Harami pattern that moved up here. And remember, I was telling you, now you have a star pattern. So you have this bullish Harami followed by a potential star at resistance. Now we got to watch and see, is it going to reverse and come back down, right? Resistance, support levels, got to watch and see. So these are some not, like I try to show you guys in the real world, because patterns are not always perfect looking. So I like to show you a lot of the messy ones, but I also want to show you lots of clean ones and ones that look really good. But that's some messy looking ones right over there, right? So now let's look at a really beautiful looking bullish Harami. This is gorgeous right here. Beautiful looking red bearish candlestick right off that pink line, which is the 50 simple moving average line. And look at that beautiful looking small green candlestick. That's perfection. So looking at over here, that is a beautiful looking bullish Harami. Perfect. And with this one, what I love about it, it's hitting support right above that 50 SMA. And it's got a small candlestick right here. And it's hitting resistance, but this is where you can say, oh, that's a bearish or a bullish Harami off support. This is where you would take a potential long as price breaks above that green candlestick with a candlestick close above it as your stop. And then as you get in, remember I told you guys you could decide to ride the 9 EMA or decide to get out when you see these consolidation candles right here. You know, so there were several warning candles before all of this happened. Remember I was telling you guys, be aware of those spinning tops at all-time highs. That gets very, you know, dicey, especially when it's at all-time highs, right? So this bearish or bullish Harami is a gorgeous looking long pattern. And then we zoom into bullish engulfing right over here, right? So with the bullish engulfing, you can see this big green candlestick is engulfing the smaller red one. Go back to our wallpapers, big bullish candlestick engulfing the smaller bearish one. This is where you would potentially go long, right? So we're going to remove these drawings just because I want to just keep your focus on each pattern right here. So here's where you would potentially go long with a candlestick. So as price breaks above this, you would go long, use a candlestick below as your stop. The only thing you got to be aware of, remember with this, guys, right? At all-time highs, and you can see it starts to consolidate, and you're like, oh, this is not going the way I want it. So if you waited for a candlestick close below the 9 EMA, let's say, you would have been out over here. You actually would have taken a loss, you know? So that, hey, but that's trading, right? You don't win in every single trade, you know? So this would have been a bullish engulfing, and it didn't go as far as you wanted it to go. And it gave you several warning candlesticks that it was going to reverse with these spinning tops and doji candlesticks, and then it fell, and then it reversed down. So this is a bullish engulfing. If you took a long here, candlestick closed below this as your stop. Hopefully you wouldn't have waited to over here to stop out. Hopefully you would have seen these two bearish reversals candlesticks and said, hey, I'm out. All right, so that's bullish engulfing. So now let's zoom over to another bearish engulfing, right? You're going to see these candlestick patterns happen over and over and over again, guys. All over the place, many times at resistance and support levels. So here's a big bearish candle right here. So bearish engulfing, this is a bearish candle engulfing this bullish one. And what you would do if you went short on this one, or this is a one that you would go short on potentially. Again, you don't just do it just to do it. You have to look at what's going on. You can see this red candlestick. You would take a short below this as price breaks below. So you would have took a short down here, candlestick close above as your stop. But just remember, guys, it's also near, you know, hindsight's 20/20 at the moment too, is nearer to support. So you may have missed this candle as it gapped down. But again, in theory, this is how you would take a short. You would take a short below this candle, close above it as your stop. But, you know, it did bear flag and continue downwards. So that would have been a nice trade if you didn't get kind of faked out right over in this area here. So that's how you would take a short on a bearish engulfing. All right, let's look over and over and over at these patterns because there's several of them here. Bullish Harami. This one is gorgeous. Beautiful looking bullish Harami. What is a bullish Harami pattern? Again, oh, wait a second, guys. So this is actually a perfect example. Bullish Harami is typically a bearish candlestick followed by a green one. Well, look right here. You can see a bullish candlestick. Is this the bull guy? Hold on a second. Now I'm confusing myself just because, guys, so here's a perfect example. If I actually think I have bullish homing pigeon in our ebook, but let me just go to Google. And, oh, maybe bullish home. Oh, look at that. There's our video on bullish homing pigeon. Let's go right over here to images. Actually, oh, okay. I think bullish homing pigeon is it could be, it's a smaller candlestick. Bullish homing pigeons are bullish reversal patterns. Investopedia is always a really good site. One large candlestick is followed by a smaller one with a body. It's located within the range of the larger body. Both candles in the pattern must be black, or filled. So they're both bearish. All right. So what the heck? I don't know why I'm confusing myself. But the whole point being, guys, it's a perfect lesson. This is where you see how my brain is racking like, wait a second, what the heck is that pattern now again? But guys, it's telling you the same story, right? Look at this and say, okay, if price breaks above this candle, you would go long with a candlestick closed below that as your stop. As it breaks out, you would have gotten out right over here. Candlestick closed below the 9 EMA or potentially the shooting star pattern right out over in here. So you'd go long at the break above this one, candlestick closed below as your stop. But so again, perfect example, guys. This is where I just want to kind of, just keep drawing your attention to this. Don't rack your brain. You still have to put everything together and also do trend lines and stuff too, right? Remember I was telling you guys you connect as many peaks and valleys and stuff. So when you're connecting these peaks, and you're connecting these valleys, what's happening here? Price right here held a previous support level, and it's continuing up. What is price doing up here? It's reversing down, right? So again, watch our video that I did the other day on trend lines. But that's how you would trade this one right here. You'd go long at the break above that small candle, close below it as your short. And then right here, here's a perfect example, guys, of a bearish engulfing fake out, right? You see how this bigger red candlestick engulfs that green one? And what did it do? It continued upwards. So you would have looked to potentially short it as price fell below this red one with a candlestick close above that one as your stop. But remember, guys, just because that's something you would do, look at how price is near support in an uptrend. That might not be a short. You want to short ideally when price is farther away from these moving average lines up here, or as it starts to fail below them. It's hard to short stuff when it's riding a trend up close to the moving average. That makes sense? So just because you see a pattern doesn't mean you trade it. You have to put it into the overall context of what's happening. All right, so let's go back. I think I have some more on here, right? Bullish engulfing. This is a really beautiful bullish engulfing one. Right above the 9 EMA, big bullish candlestick engulfing this red one. You would take a long as price broke above that green candlestick, close below it as your stop. And why is this pattern happening, guys? I haven't gotten to these ones yet. We teach this in our course, but look right here. There's resistance over here. Previous resistance levels. It's breaking out. Remember I was telling you guys about cup and handle patterns? Kind of a big cup. Or you can say it's a left shoulder, head, right shoulder. So you can call this, or you can call it kind of a V bottom. Right? So there's kind of a V, there's kind of a cup, and there's also a left shoulder, a head, and a right shoulder. What is that all telling you? It's still bullish overall bigger candle, or it's a bullish pattern, right? Cup and handles, V bottoms, and inverse head and shoulders are potential breakout patterns. And remember, I was telling you these spinning tops and all these things consolidate. Not only do they reverse, they consolidate. When they consolidate, you put them together into bigger overall patterns, right? So these spinning tops, these bull flags, these bear flags, these bullish engulfing and bearish engulfing and Harami patterns come in to also form bigger overall patterns like cup and handles. And I like to use the analogy of like candlesticks are like those magic eye pictures in the past. You remember, you guys know those pictures where you'd stare at them, like you look at the picture and like, wait a second, there's an elephant inside of there, or there's a beach. There's like all those little dots, right? In your eyes, they got to adjust and you got to look and you got to see, and it gets blurry. They drive people nuts. And then all of a sudden, like one day after staring at the picture for hours and hours, you're like, oh my God, I see the elephant. That's kind of what candlesticks are. Is at first they just become like a mess and they're jumbled, like what? And then they just start to pop out at you. And they're everything. They're everything when trading, because that's how you find the support, resistance levels, and how you draw your trend lines and how you can mitigate your risk. Very important. All right. So bullish engulfing. You would take a long above this green candlestick, close below it as your short, or as your stop. All right. Here is a bullish Harami fake out, right? Big bearish candle, smaller green one inside of it. Typically, you would go long as price. Here's how I gotcha. Perfect example of a gotcha. And, this is great. This is a great example. Bullish Harami, you would typically go long as price breaks out above it, candlestick close below it as your stop. Here's a beautiful learning example. It happened right at resistance. Remember, guys, I was telling you about trend lines? Well, actually, that's not the best way. Right here. You guys see right here, price, it's hitting angular resistance. This red candlestick wasn't red at the time. It faked you out. It was a false breakout. And then what did it do? So this is where you would have gotten trapped on a bullish Harami breakout. And look, what did it turn into, guys? If you're paying attention here, put that red candlestick with this green one, and what do you have there? It went from a bullish Harami, smacked resistance, and then it turned into, drum roll, bearish engulfing. Bearish candlestick and wraps or envelops that bullish one, and that's how you got trapped. Boom, fall. But would you have necessarily gotten trapped? It all depends what your trading style is, right? If you were trying to day trade that, you may have like gotten in and saw it reverse and gotten out. If you were swing trading it, you would have potentially gotten nailed, depending on your time entry. You see it poked out, and then what happened here, here's where you got trapped on a long, and now here's where the shorts, when it turned into a bearish engulfing, right? With bearish engulfing, you take a short as price breaks, falls below, with a candlestick above as your stop. So that would have been a really nice short, because now it's failing the support levels and moving average lines. You would have gotten faked out right here. Why? Because price didn't hold resistance. It failed. And you can see as price is going down like this, you see these lines over out in here. This is actually a bigger overall descending triangle. Or you can call it a falling wedge. So you can see, guys, when you put this stuff together, you're like, oh, that's a falling wedge. It's breaking out. But it's also potentially a descending triangle. Right? You got to see this stuff. Super important, guys. That's why you have to like learn all these different patterns. That's why I'm trying to go slow with kind of walking you through each of these, because each candlestick pattern means something in the overall scheme of trading. So that was a bullish or a bullish Harami that faked you out, that turned into a bearish engulfing and dropped. Here was another example. Look at that. I was doing the video and I wasn't even paying attention to this learning lesson over here. Bullish Harami right here. So guys, you would have, and if you guys are paying attention to what I just taught you, or I'm telling you right now, you should see something else. Here's a test. I'll let you look at this for a second. What are we looking at there? Very important. Bullish Harami, right? You would go long at the break of that. Here's a beautiful looking bullish Harami. You would have gone long here. Candlestick closed below it as your stop. What happened, guys? It happened right near resistance, and what did it do again? If you're paying attention, bearish candlestick and wraps the bullish one. Turned into a fake out, a bullish, or turned into a bearish engulfing, like I showed you guys over here. Bullish Harami followed by a bearish engulfing. Bullish Harami followed by a bearish engulfing. And then, not to confuse you even more, but let's go with it. Then it hit you with a piercing pattern. You can say, what's a piercing pattern? Right over here. A bullish candlestick piercing into, right? It's piercing into. The bulls are trying to, or bears are trying to push it down. So the bulls come in, they pierce that candle. They're trying to push it up with their horns, right? So you have a, right here, guys, bullish Harami rejects, hits resistance because the bears are trying to push it down. They're engulfing that bullish candlestick, pushing it down. Bulls are saying, oh, heck no, we're pushing it back up. Who wins? Bulls won. So now that's where, with a piercing pattern, what would you do there? You take a long off that bullish candlestick. Candlestick closed below it as your stop. So right over in here, you would have taken a long as price broke above that bullish candlestick. Closed below it as your stop. Now, if you were, let's talk about this for a second. So this is where patience comes in and trading decisions. So on this bullish Harami, remember I told you guys you would have gone long off that hammer, candlestick close above this as your stop, right down here. If you noticed, it was followed by a bullet bearish engulfing, right? And it failed. But guess what happened, guys? Technically, you didn't get a candlestick close below this as your stop. So if you stayed in it, if you were willing to risk that, you actually still, even though it failed what you wanted it to do, you still wouldn't have stopped out. The bull still held and pushed it back up. So that's a matter of your risk tolerance, you know. Guys, I'm going to look at some comments at the end for you guys too as well. I've been making these videos super long, so I'm trying to make them shorter, but I don't think I'll succeed today either. But I just, you know what, guys, it's just, I can't help it because these things are so important that repetition is the key. Beautiful bullish Harami. This one's gorgeous. Huge bearish candlestick. You would have entered, and look, right? Where is this happening? It's happening right above that 20 EMA, near support. As price breaks above that green doji or spinning top candle, you would have taken a long here, candlestick closed below it as your stop. And then what did it do up here? At resistance, guys. It's at all-time highs. It's breaking at a huge resistance level. What do you do up here? It's a bearish Harami. You would take a short. This is a beautiful short right here. Price is farther away from the moving average lines at all-time high resistance levels. This is a really nice potential short down, candlestick close above it as your stop, right? So that's a beautiful looking bearish Harami. So this is a beautiful bullish Harami. That's a beautiful bearish Harami. Am I saying that right now? Beautiful bullish Harami, bearish Harami, right? But you guys see how they're, you know, they're just, you're putting this stuff together and it's, oh, that's something I want to show you guys too. You could even call, see there's kind of co-equal bottoms right here. Kind of getting into that whole thing I was telling you guys about, right? That could have been tweezer bottoms, right? So if you look at it, it's basically a bullish Harami, but it's also tweezer bottoms, co-equal bottoms. Who cares? It's telling you the same story, you know? Now, this is not quite tweezer tops, but who cares? It's kind of similar. So is that a bearish Harami? Is it tweezer tops? It's not perfect tweezer tops, But what is it still telling you? It's telling you it's at resistance. This second candle couldn't break the first one. Potential reversal downwards. All right, perfect. I actually got through the SPY. Wow, I'm doing pretty good. Let's look at some small cap ones. I'm actually doing pretty better in timing on this. So instead of patting myself on the back, let me go. Let me move forward and see if I can make this under an hour. All right. I know when I'm done with my videos when I'm almost out of water and I have about a quarter of a cup left. So, so we'll see how far I can get into that or how far I can make it here. ACB. If you're watching the other videos that I've been doing. Here we go. Oh boy, I put a bunch of them on ACB. All right, let's see what I can do here. All right. Oh my goodness. So here's the Canadian, was the Canadian, or whatever you want to say, darling pot stock. Let's go through these on ACB. All right. So bullish engulfing, right? So price is, look, price is so far. You can, you know, while we're out here, guys, I talked to you about piercing pattern. Might as well tell you about that pattern. See how that one's kind of covering part of that green candle? That's the inverse of the piercing pattern. Remember I was telling you how the piercing pattern's piercing into the bear. The bear's trying to push price down. Bulls pierce into it and say, nope, we're trying to push it up. Dark cloud cover is bulls are trying to push the price up and bears are like, nope, we're going to push that price back down. So if you look right here, bam, that's a dark cloud cover. Bulls pushing price up. Bears are like, oh, heck no. Boom, pushing it down. That's just the inverse of the the piercing pattern. But anyways, I figured I'd show it to you why I see it. Big. So what did it do? It hit support. So that dark cloud cover push price down. It nails off the 9 EMA. Bulls are like, oh, heck no. We're going to stop it from falling. They're going to engulf it. So the bulls engulfed that candle. And they're like, nope, we're going to hold support right here. But then what happened, it went from a bullish engulfing followed by a bearish Harami or a star pattern. This is where it guys, right? So you see how I kind of enveloped them together? This is a bullish engulfing over here. But then you have, this is where you're like, okay, is that a star pattern? Is that a evenings? Is that going to be a star that's going to turn to a morning evening star? Or is it a bearish Harami? Who cares? Telling you the same story, right? It's a reversal towards the downside, right? So it's a star, it's a bearish Harami. What did it do? It fell back down. It turned into kind of an evening star pattern and fell. And then what did this do? Kind of going along the series. Remember what that is? That's a morning star pattern, right? Remember we talked about that last video. Morning star, looking over here if you're confused. Oh, that's a 3 candlestick pattern reversal. What did it do over here? 3 candlestick reversal. You would have gone long over here, and it took a while before it went and broke out. Again, it's a, you know, these marijuana stocks are notorious for pumping and dumping, but okay, so how do you trade this pattern before I go on? Typically with the engulfing, you would have waited till price broke above here. So technically with this bullish engulfing, you wouldn't have gotten faked out because technically price didn't go above it, right? If you were to go long. So that would have been a long one, but it didn't break above. But you would have taken a potential short with this bearish Harami when price fell below over here. The only problem is it's kind of nearer to support like I was telling you guys. So you got to decide, you know, do you want to take the short there? I like it when price is way out here or way out here or way out here. I'm not a huge fan of shorting. This actually turned into a head, left shoulder, and right shoulder. It kind of turned into a head and shoulders pattern. I'm not huge fans of shorting off the right shoulder on head and shoulders. I don't like that very often. I really, I'm not a fan of it. Okay. This one right here, guys, bearish Harami. You would take a potential short as price fell below this candlestick. Problem though, huge candlesticks. Remember I told you guys, I don't like risking off of major candlesticks. It's a lot more risk, not my style. So technically, like I said, it's a bearish Harami, doesn't mean you trade it. And in fairness, it didn't break or fall below it until down over in here. But you see how these candlesticks are way bigger? You could say, why are the candlesticks so much bigger over there than they are back here? Buy the rumor, sell the news. Chat rooms pumping, dumping, pump, dump, pump, dump, pump, dump. Buy the rumor, sell the news. Buy the rumor, sell the news. Buy low, sell high. Buy low, sell high. So if you're one of the people that are wondering in anything, any stock or security, why did it just dump when there's all this great news? It could just be normal profit taking, you know, with the stock in general. With a lot of these garbage pot stocks, though, it's the pump and the dump. There's a lot of chat rooms and stuff that pump this stuff. Now, what is this over here? Bullish engulfing. Big green candlestick engulfs that smaller red one. And that was really nice because it happened right at support off that 9 EMA. So you would take a long as price breaks above this, candlestick close below as your stop. It's just riskier, guys. You know, I'm not, like I said, I'm not a huge fan of these myself with like, especially when prices at all-time highs. It's a lot more risk. And as you can see, it had some indecision right here as it broke above. You know, so that's where maybe you don't keep your stop all the way down over here. So if it goes, maybe you're like, you know, if price fails a little bit sooner, maybe I'll get out. You know, it's just a matter of, do you want to risk off a big candle like that? That's up to you. I just, you know, I like small risk. So that's where you would have potentially, this is how you would trade it though. Price breaks above, candlestick closed below. And what did it do? It did break out, you know? All right, so let's look over here. So now we have, what is this up here? All-time highs. You're like, why did this happen? Well, remember, just here was all-time highs over here. So why did that bearish engulfing happen? Well, look, guys, this is like a hanging man candle. And this bearish candle engulfed it. It formed a new high, and then it failed the previous high. This would have been a beautiful short. So this is where price is far away from these moving average lines. It's failing all-time highs. So this is where you would take a short below this candle, candlestick close above this as a stop. This is a nice short. I would like to short this one over this, right? I'd like to short, and not even necessarily that dark cloud. I'm not a huge fan of the wicks and the shadows, but okay. Hopefully this is helping you guys. I just want to show you they just have all this stuff. They happen on all different charts and time frames. So again, repetition is the key. Right over here, bullish engulfing. This is a gorgeous one right here. Nice, beautiful green candlestick, small, tiny red candlestick. Right here, you would take a long as price breaks above, candlestick close above below as your stop. And as you can see, price said, hey, we're struggling. It's not going to break. It's not going to break. It's not staying above that 50 SMA. So you would have probably gotten out over in here. You know, definitely when you saw this candlestick, you're like, I'm probably out. But that's where you have to be careful with these ones, with these small. That's why we say, like, with penny stocks, there's a lot of people, and I get it. You know, we all get it. It's like, you know, when you have a smaller account, you want to buy cheaper stocks and hold them long term. The problem is with penny stocks, guys, is that, like, the charts, they're a mess. Like, how do you swing trade that? It's very difficult. You swing trade it potentially when you get something back here or back here. But when it's way out here, it's a mess. And this is where all the new traders get screwed, is because they buy at top levels. And you're going to see as this goes along, as I've showed you if you've been following, it's now a penny stock. You see the price keeps going further down. This is your prototypical pump and dump penny stock. What will it do long term? I don't know, but the chart sucks. What is this? Bullish engulfing. How would you trade it? If you took it, now this did bounce. It bounced off the 200 SMA. It hit support. You would take a potential long off the break of this price of this candle, and then you know, short below or close below this as your stop. Now you got to remember, with a stock like ACB, this is a heavily day traded stock. So if you're looking at a stock like this and you're trading it, this is a day trade. You know, it goes up from 615. If it's rejecting at 678, that's a beautiful day trade. You know, if you were swing trading it and you got caught up in this mess, that's not very fun. But it also turned into a different, you know, that's like a pennant pattern or a flag. But if you're day trading this, that's a beautiful day trade. You know, so you would have said, okay, you know, had your kind of your setup, you're like, hey, if price breaks above this candle on this day right here, right above that 615, I'm going long. And then you would have looked intraday at reversals and said, oh, okay, cool, I'm scalping, I'm getting out. You know, and out of that 615 goes up to 680. What is that? A 60, what the heck? What was it? 65 cent move. Chances are you probably wouldn't have scalped all 65 cents, but if you got 20, 25 cents or something, that's a beautiful day trade. What happened over here? Bearish engulfing. Why did this happen? Well, just remove these lines. Here's a peak level right here. Price hits that peak level here, forming basically a cup pattern, right? You can think a cup. Oh, is this a cup and a handle? Well, I don't know. It's very far away from the moving average lines. It did form a handle back, and look, it failed. That's where it didn't break above, and you can see this red bearish candlestick engulfed this green one, and you would have taken a potentially short right here. Candlestick close above as your stop. That would have been a nice short. Why did that bearish engulfing happen? Because it couldn't hold this previous high. Do you guys see how support resistant patterns are absolutely key for everything? All these patterns matter, and you can see they make up, all these little patterns make up what I was kind of, you know, all the bigger patterns. You can see a big cup pattern. It's forming a U, a big U, that's a cup. You know, you can see back here we're talking flags. One of the last videos, you know, when you do your trend lines down like this, that's kind of a pennant or a flag. Flag or a pennant. Remember I was telling you it's not just reversals. A lot of times it's consolidation. What happened as it converged right down here near support levels, it broke out. So right here, this is a bullish engulfing. You're like, oh, okay, darn, it's reversing. It's going to fail. Well, it actually turned into another bullish pattern. So technically on this one right here, if you use this as your stop down here, you could have actually still been in it. You know, I just, again, me personally with penny stocks, I don't like this. I don't like the stomach of holding them for long periods of time because there's so much pumping and dumping. I'd rather day trade them than hold them. But if you held them, you want to look, here's what you're looking for. Remember, small little candlesticks off of support levels. Here's a flag. It's kind of a, I don't know what you want to call that, a flag or a wedge. You risk off the break of that small candle. Take your profits way out here. Buy low, sell high. Green hammer, that is gorgeous. That's like my favorite right here. Small little hammer off the 9 EMA, small risk, beautiful. Either one of these two right here. Those are gorgeous right there. Bam, as it breaks out, consider taking your profits. You know what I mean? It's a nice move. 692 up to 781. It's almost a dollar move. You know, take your profit. Buy low, sell high, watch for pullbacks. Problem is with a lot of these small cap penny stocks, you don't get many of them because they're heavily pumped and dumped. All right, cool. So now we got bearish Harami. Wait a second, isn't that a bearish Harami? Yep, okay. I'm starting to confuse myself. So right here, green candlestick up at resistance right here. What did it do? It failed, right? It's at resistance. Look, see the moving average lines pushing it down? You'd take a potential short below this red candlestick. And also just remember, when we're drawing the trend lines, you know, here's a peak over here. You know, so what is it doing, guys? And you can see actually kind of this. You guys notice how it's a lot harder to draw trend lines on small cap stocks like this, the penny stocks. The wicks and the shadows are all over the place. They're a little bit more difficult to do because they're not as clean. Doesn't mean you don't trade them, but that's why a lot of people that's why it's easier to day trade them and not swing trade them, because you're dealing with all this. Like, how do you swing trade that? You know, you got to have a pretty darn good stomach, unless you're shorting it on the way down. But it's a day traded, so people are shorting this intraday. Some people might have the cojones to hold longer term with it, but I ain't dealing with that. So, but you can see price is going up, and it's in a downtrend. It's hitting resistance. You take a short below this candlestick close above as your stop. Just, again, this chart just makes my head spin. I'm showing you the patterns, but these are not my favorite ones. For day trading, different story, but not swing trading. Heck no. All right, so perfect example, though, guys. You're seeing in this downtrend. Now look right here. Big bearish candle envelops the green one. What is that? Bearish engulfing. Why is that happening? Well, look, it's at resistance caught between the moving average lines. Take a short below this red candle. And this is actually not a bad, this is actually kind of more of my favorite one to do, because I like now how it's closing below the 9. So you see it hit the 20, rejected, closed below it. This is what I like a little bit better. Now, the only thing that might shake me out is this, the 200 SMA below it. And you can see there was a green candle. I actually like that. Oh, perfect example. Here we go again. Right here. This I'd like a little bit better. See how this kind of bearish engulfing is happening below the 200 SMA. Now I like that a lot better. This is a little bit riskier because it's caught right at that 200. Many traders buy at the 200 SMA, and they did right here, and it was a little bit of a fake out. Now again, there's other strategies I haven't shown you yet of you could short when it's hitting off a resistance up here, not waiting for the candle to close below this. That's different videos. I'm just trying to show you the technicals of the patterns for now. So technically, I would have liked this. This one a little bit better. So as price failed below this black line, the 200 SMA, as it failed here, I would have taken a short, and then you would use a candle close above this as your stop. But obviously, you know, I'm taking my price down. You know, I'm taking my profits down here off that hammer. And let's see what else we got. I got one more to chart after this. What is this one? This is kind of a bullish Harami, right? Bearish candle, green one inside of it. And it went right back up to the moving average lines. Now you see, guys, if you're paying attention, what did that turn into? Remember I told you these 2 and 3 candlesticks turn into other patterns. So here's basically a bullish Harami pattern. What do? Connect your trend lines right here. 1 candlestick, 2 to 3. Right up to here. What is that, guys? That's a bear flag. So you'll see a lot of these reversal patterns turn into the other patterns, right? Which is a bear flag. As it's failing the flag, hitting resistance at the moving average lines, take a short right below that 9 EMA. This is a gorgeous looking bear flag. Beautiful. But you remember I told you guys, if you're doing the ride the 9 strategy, here's a perfect example where you would have gotten tricked out. Right over here, this is where this candle would have, that would have been nasty. Now you still would have profited if you shorted at 721 and you're out at 682. But guys, that's what I'm saying. When you started seeing this consolidation here, you should probably take your profits, you know. But hindsight's 2020, right? You still would have profited, but that's where, again, this is where the volatility of those small cap penny stocks, you got to be careful when you're holding them longer term because you're dealing with all those whipsaws. All right, one more to go, and I'm almost out of water, so let's do this. AGS. All right, so now we're going to zoom into a 1 minute chart. Oh boy. I have a bunch on here. Oh boy. All right, let's do it. Of course, I got to show you guys. I got to show you this stuff. Jeez. All right. So if you're listening to a playback, guys, if my voice sounds dry, just deal with it because I got to go with it. All right. So AGS, penny stock. This is a bearish Harami right here. Big green candlestick, smaller one inside of it. That's a nasty looking high wave candle. As I told you guys, I don't mess around with high wave candles. I don't like that stuff. I like small candlesticks. I don't play around with high wave candles. If you did, technically you would have taken a short below this candle on the way down. But guys, I'm not messing around with that. There's other ways to short it. Again, as price is failing a previous high, you can take a short coming down here or down. Just not my style, guys. Plenty of people short it this way, just not my style. So that's a bearish Harami. But let's look at some other ones. There's also, I think I put bearish Harami times 3, right? Yeah, here's another bearish Harami right here. You guys see how it's another bearish candlestick inside of this one? That's another one right here, right back down here. This is a little bit more my style. This one right here, it's smaller, but again, guys, I do not like a lot of wicks and shadows. I just don't like it because it makes it a little bit, it's just too volatile for me. Even on a large cap stock, I don't know if I'd play around like that. I like smaller ones. I have to, I'll show you along the way if I see better ones. You guys have seen if I made my other video, like stuff like this, like small little gravestones, hammers. Like I like hammers. Right here. So bullish Harami, bearish candlestick, kind of above a support level, that 50 SMA, right below those green dots. VWAP, this is where you would consider taking a long as price breaks above this candle right here, this green candle, candlestick closed below it as your stop. And look, this took off. And then you can see lots of garbage up here, guys. If you're like, why is this? It's a mess. Well, think about it. It's dealing with this mess over here, right? So this mess right here is contending with this mess over here and this mess over here. I don't want to call it looks like a mess. This is what happens with penny stocks every day. So obviously you can trade this and do really well with trading this. It's just these candles are just a mess. I don't play around way up here. I play around with this stuff right here. That's beautiful to me. I like that. This, I would consider this one too. A hammer, these small little candlesticks off support levels. I don't play around with all those huge wicks. So right here, you would potentially go long here. And then as you start seeing this mess, you're like, okay, it's not breaking high a day. I'm going to consider taking my profits and getting out, because look, it's a mess, All right. So as we go along, remember, this is a 1 minute chart, guys. So this is day trading, and you'll see these patterns happen all day long on these, small cap stocks. Where was I left off? Right here. Cool. Bearish Harami failure. Bearish candlestick. Smaller green candlestick here. There it is. You go long at the break above this candle. And look. Well, first of all, there wasn't really a failure because price didn't break above it. But what did it do? It hit. The reason why it didn't break out was because it hit resistance at that 9 EMA. And yeah, again, price didn't break above, so it fell. So that's a bullish Harami, but it didn't break out. And then what happened down here was a bullish engulfing failure. So look, this green candlestick broke above or engulfed that bearish one, but what did it do? It hit resistance and it didn't break out. So here's a bullish Harami that didn't break out. Here's a bullish engulfing that didn't break out. Why didn't it break out? It's hitting resistance. It's hitting resistance. It's hitting the ceiling. It didn't break through. What is this one? Another one right here. Bullish Harami failure. Red candlestick, smaller green one inside of it. Why didn't it break out? It's hitting resistance at those moving average levels. Or you can just kind of, you know, remember it connects out over here. Right? Connect your trend lines. It's smacking here. It's hitting the moving average lines. And obviously didn't go any further up. And as we progress further, so here's another bullish Harami. You're like, oh, why did that one fail? Well, look, it's also very far. I mean, technically it didn't fail. And actually remember, it's a green candlestick with a red body inside of it. It's telling you the same story, right? Remember I was telling you everything's not perfect? Well, actually, no, I'm sorry. That is that's a bearish Harami. Yeah, my fault. See again? These candlesticks, they start driving you nuts after a while. So that is actually correct. That is a bearish Harami. So this is where you would actually take a short right here. As price breaks below this candle, candlestick close above as your stop. It actually didn't happen on this next candle. It happened over here. All right. This is day trading. This is the bulls and the bears duking it out. Why does this look so crazy out here? It's because it's breaking, I believe, high a day. Yeah, it's breaking a high a day. Here was the second high a day. Here was the first high a day, right? That goes into the future, and there you go. Now it's dealing with that high a day right over in here, and this is the bulls and the bears duking it out, and the bears won. Push price down. So you would take a short on that bearish Harami down. That's a nice looking short. Then you would have covered probably down in this area because it's right above the 50, you know, and it's holding, you know, holding support. Now you have another bearish Harami. Why did this bearish Harami happen over here? Right? You would take a short potentially below this. The only thing, it's a little bit riskier, you know, I mean, it's a little bit closer to the moving average lines, but now you have just show you guys here. Yeah. High a day, kind of second high a day, and now you have third high a day. That's actually a head, left shoulder, right shoulder, head and shoulders. Connect here, price failed the neckline. So, you know, you just kind of think about this as the neckline, that 9 EMA. You have a head and shoulders neckline failure down. And then what did price do? It popped back up again, so you could call, you know, still call it basically a head and shoulders. You know, it just couldn't go back up and break that level. Turned into a bearish Harami back down. Beautiful bullish Harami right over here. Where was it? Beautiful looking bullish Harami, right? Small little, right? As price breaks above this candlestick, take a long, close below it as your short. And look, you know, look what it does, guys. It took a while, you know, so that's several minutes. And then what did it do? It's just not doing what you want it to do. But actually, if you held strong, so again, me personally, if I took a long on this and I saw this, I'm out. You know, I'm like, screw it, I'm out. You know, so that would have been a 243, 246. I would have taken the 3-cent profit or whatever. I'm out. I wouldn't hold through all this. You know what I mean? I just wouldn't. But technically, if you stayed strong on that, you know, you actually would have profited. But, you know, trade with real money and holding through this stuff, you know, most people don't have the guts to stick through that. But you could, again, also too, you know, it's these penny stocks, they just have more of this volatility. Now, if this was Apple or something, that might be a different story. You know, it's less pumping and dumping. And then you'll see, as we start to finish this and wrap up, another beautiful looking bullish Harami pattern. As price breaks above this, you would take an entry. So right over here, and look, there was kind of a fake out right over in here. Didn't fail, and then it took off. So if you held through this, but you would have probably gotten shook out, right? This may have shook you out. But if you stayed with candlestick close below it, you still would have been in. That's the decisions, right? If you're like, oh my God, that seems confusing. What do I do? Maybe day trading isn't right for you. You know what I mean? That's kind of how day trading is. You get these fake outs a lot of times, and then it breaks out. And then right here, this is kind of I don't know if this is the bullish homing pigeon or I just called it a different bearish harami, right? My brain is so fried right now. I don't even want to what you want to call it. But as you can see, it's actually a tweezer top, basically. See how they're kind of co-equal tops? If you want to call that actually a tweezer top. So it looks like a bearish harami and also co-equal tops. But what is it telling you? Same story is it's not breaking this resistance level. So what is it? Potential short as it falls back down here, right? So it's hitting resistance, basically a double top pattern. Take a short potentially below this, and then you decide when you're going to cover. Any more? And voila, that's it, guys. That's a roller coaster. Whew. All right, let me see some of your comments. All right, so what am I drinking out of that red cup? Actually, it's just water. There's no way I could drink anything out of this. My throat would go super dry. I bought these cups due to the coronavirus, so I don't have to wash glass all the time. I use a lot of plastic or paper cups. I'm sure people will probably get mad at me for doing that. Whatever. And I don't recycle either, not because I don't believe in it, because I'm lazy. So yes, I'm drinking out of plastic cups and I'm not recycling. So I'm sure somebody will hate me for that. So in the plastic red cup is definitely water. There's no way I could talk this long. Falling wedge and descending tell the same thing. Yes and not. Well, that's a different story, right? It could tell the same thing, but not always. You know what I mean? That's where you have to look at all the other patterns together. Awesome. Glad that's helping you guys. How do I zoom in without doing that to the chart? So I zoom in and out like this. By doing what am I doing? I'm holding the control key down and I'm using a mouse that scrolls in and out. So I hold the control key and I zoom in and out with my mouse. What else we got? Does that finish the double top with ACB? ACB's got a lot of double tops. Right off the bat. Hey-o. Top. Top. Nasty. Nasty looking double top. You look at that chart, guys. That is a penny stock. Whew. Buy the rumor, sell the news. Buy the rumor. So buy the rumor, basically. Sell the news. Buy the rumor again. Sell the news again. Chat room's pumping this stuff for months on end. Chat room's pumping it for months on end. Buy the rumor. Buy the rumor. Sell the news. Sell the news. Sell the news. What do you see here? A head. A left shoulder. A right shoulder. A head and shoulders pattern. What chart timelines were the charts you were showing today? So ACB, I was showing the daily chart right up here. SPY, I was showing the daily chart. And AGS, the one at the end, was a 1 minute chart to show you guys different perspectives. Do you wait for confirmation to avoid fakes? Yeah, that's where the other videos I was showing you guys, I'm trying to, because I can go all over the place with these. I'm trying to go through like step by step through the process, right? You'll see I did ones on riding the bull flags and bear flags and riding the 9 EMA. I did trend lines for you guys. I did single reversal patterns. I did star patterns for you yesterday. Now I'm doing like bullish and bearish engulfing. I'm not sure what I'll do next. Maybe I'll do some bigger ones for you guys. I'm really honing in. We did a lot of candlestick videos already for you guys, but I'm really trying to go in depth with this stuff because like this is trading. When you put it together with the trend lines, now you can see why these patterns happen at critical support and resistance levels, you know, because this is price action is everything when trading. Moving average lines are a guide. Price action is the most important. Great question. So when I say bulls and bears are duking it out, is that people taking profits or people shorting or both? It's both, you know, it's both. And it also can depend on, you know, what kind of pumping's involved. It could be natural profit taking. It could be dumping. But in essence, you know, you could even just call it like it is. There's people shorting just normally. They're taking a profit. So whether they're dumping or shorting, it's people taking profits, right? So the bulls and the bears could be normal duking it out, or it could be, who knows what's going on behind the scenes, you know, depending on what it is. You're welcome, John. Hey, comments are coming in. What's the moving averages I use? Yes, yes, you're right on the money right there. So the blue is the 9 EMA, the red is the 20 EMA, the 50 or the pink one is the 50 SMA, the black line is the 200 SMA. Oh, perfect. Oh, you want me to do Ichimoku? It's kind of funny, guys. Actually, it's so funny because on our YouTube, I did our highest watched video is the Ichimoku, and I don't even use it anymore, to be honest with you. I'm actually rusty with Ichimoku, but it's our. I mean, this is a great video. I'm not gonna lie. It's actually a really great video I did back in the day. So this really tells you I just don't use it anymore. So you'll see there's 150,000 views on Ichimoku. I just don't use it anymore. But it doesn't mean it's not bad. I just like, you know, again, we all evolve as traders. You know, that was 2016. Look at 4 years ago. But it works. You know, Ichimoku is a great strategy. I just don't use it anymore personally. But if you want to use Ichimoku, that video should be really good for helpful on the basics of it. Please share the website I'm using. Not sure what you mean. The platform I'm using is Thinkorswim. And what else you guys say? Yeah, these are great. It's crazy how I see like kindergarten level, LOL, every time you do your thing, seeing more and more every time. That's awesome, guys. That's what I'm trying to do. The videos are longer, I know, but if you have the patience to kind of take these in, it's over and over and over. You'll start to see these patterns and they'll pop out at you right here. Just like, again, just kind of zoom out, you know, you just take these candlesticks and connect the peaks and the valleys, right? Connect the peaks, connect the valleys, connect the peaks, connect the valleys. What do you have? Kind of a falling wedge or a megaphone pattern, right? It's in a downtrend, right? Now it's getting into maybe in the middle. We'll see. Is price going to gravitate up or is it going to fall back down? But you can see price hits, you know, buyers came back in. Hit resistance, fell back down to support, hit resistance, came back down to support, hit resistance, came back down, and look, it doesn't always come right back down again. Then you could have other trend lines kind of coming down through here as well. You know, hit resistance, hit resistance. What did it do? Fell back down to support, 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 right? Find these channels, and then there's all the channels within the channel. But then when you zoom in, what are you going to find in a huge overall down channel like this? Is you're going to find, If my mouse will zoom. I mean, just lots of bear flags, right? I mean, bear flagging on the way down. You know, just kind of like, but just draw the trend lines, right? Like this, guys, right? What did price do? It hit up here, failed the trend line. You know, what did it do? It hit resistance, failed the trend line. So this is where you can do it down and then just kind of go as it's moving back up, right? Find the channels. Find the channels, kind of like a bear flag or whatever you want to call that, right? Kind of bigger overall bear flag. Right in here. Hitting resistance, bear flag down. Bear flagging, bear flagging. Then on the way up, guys, going back to what I was telling you, like my favorite thing is the bull flags, right? I love bull flags or these pennants. The consolidation right here. Beautiful looking pennant. So this is moving up. Let the bulls and the bears. I ain't playing around way out here. I ain't dealing with that. You know, let all the bulls and the bears duke it out. Let it consolidate back down. And then I'm sniping in right here. Small little candlestick off support. Get the breakout. I ain't playing around out here, guys. I'm not playing around. It's just too much risk for me. Unless I'm day trading. That's a different story. You know, day trading's a different story. But you can see after that pump, where was your next like swing trade long entry? And then right back here. Ideally, you'd want to get in right here. I mean, that's gorgeous right here. You know, hindsight's 2020. You have the first and the second pullback, right? They always say first and second pullback on trading, and then the third or more, it gets more difficult. Well, you have the third kind of out here. Least risk, next least amount of risk, way more risk, and then it's the flush down. First kind of pullback, second pullback. I mean, over here, it's just kind of a trading yo-yo, right? But this is what you want. This stuff, small little candlesticks off support. But the problem is most new traders don't know what they're doing, or they listen to a chat room, or they listen to the news. Oh, Canada's legalizing marijuana. Cool, let me buy it. And they buy it out here. And meanwhile, all the people that were pumping it back here and back here are dumping it over here. So it's, remember, buy the rumors, buy the rumor, sell the news, buy the rumor, sell the news, buy low, sell high. Problem is, most new traders, they buy high and then they sell low. And here's the perfect example of most penny stocks in a nutshell. Doesn't mean you don't trade them. We teach, again, this is a great strategy to trade if you're trading them daily and trading the momentum. But most traders that are new don't take time. They're either lazy and they don't want to learn, or again, guys, trading's hard. I'm not going to sugarcoating it. Trading's not easy. But you got to treat it like an education. You got to study this stuff. You know, study it hours upon hours upon hours upon hours upon hours and practice it. If you're not willing to study and invest, you know, you're not going to be a successful trader. But this is a skill set you'll have for the rest of your life. If candlesticks go away, something better is going to come along. But it's still going to be support, resistance, and patterns. What do you see here? This is just a double top, guys. This top couldn't break this top. Double top, failure. And this is what penny stocks look like mostly. They pump, they dump. They pump, they dump. They basically, whatever you want to say, probably say pumping and dumping. And what do you guys see right there? A double top, or you can see a head, left shoulder, right shoulder, head and shoulders failure. And what is ACB, the darling of Canada pot stock, the second darling? It is now below $1 penny stock. Speaking of which, what is Canopy Growth? Let me just look at that one real quick. TJ, what is Canopy? Anybody know Canopy Growth symbol? Canopy Growth. I know they changed their symbol. Let me see. Canopy growth symbol. Oh, CGC, that's right. CGC. I think that's the darling of Canada. Ho! There it is. That was the one Snoop Dogg, I think, bought into, right? All the celebrities promoting that one. Here you go. Same chart. Head, left shoulder, right shoulder, head and shoulders. All the new people putting their life savings at 59 bucks. And now what is it at? 15 bucks. That's the darling of Canada pot stocks. Why is it looks like such a crappy chart? Because it's the same thing over and over again. Buy the rumor, sell the news. Buy the rumor, sell the news. Buy the rumor, sell the news. Pump and dump and pump and dump. And then all the way down. And you trap all the newbies and sucker in their money. Which, speaking of which, let's look at Bitcoin. I'm sorry. I always get such a kick out of Bitcoin. I mean, this is just tracking Bitcoin, but there you go, guys. Buy the rumor, basically sell the news. Just, I don't even know. This just charts is garbage, but Bitcoin's going to the moon, right? It's going to the moon. Maybe. All I know is the Bitcoin chart is terrible. I mean, it's terrible. How about all the people? This is, I mean, Bitcoin's going to the moon and people look at it. I mean, again, this is just tracking Bitcoin, but people put their life savings in tops like this and it just, I mean, but what is it, right? As I've been teaching guys, just connect this peak right here. Connect it with this peak. Well, how come Bitcoin dumped? How come it dumped over here? I don't get it. Why did it fail? Why didn't it go up to the moon again? Well, duh, this peak connected with this peak. It hit resistance. Well, Bitcoin charts don't matter. Guys, I can't tell you how many times I've seen that in our community. So many people come in our face group and say Bitcoin charts don't matter. The charts don't matter with Bitcoin. That's a bunch of BS. Connect the peaks, connect the valleys. Peak, peak. Boom, nailed, right back down. Right here, just connect the peaks and the valleys. Oh, here's some valleys down in here. Right? It's kind of a trend lines, guys, right? Remember I was showing you trend lines the other day? Price goes up, comes back down, goes up, comes back down. Right? These consolidation areas, buyers come back in. So now we'll have to see. Question mark over here. Will price go back over here? I don't know. This is a falling wedge. Bitcoin could break out. But how do you know if Bitcoin's going to break out? We'll look and see what happens out here. Will price break out of that resistance level? It's possible. I'm not going to guess. You know what I'll do? This. Here you go. There's my trend line, right? So that's kind of a falling wedge pattern. Now we'll watch and see Bitcoin. If Bitcoin goes and breaks out of these levels, then you want to see it do this. Horizontal and vertical support and resistance level. Here's a peak. Here's a peak. Here's a peak. Here's a peak. And now we watch, right? Maybe over right there, there's a peak. And there's a peak. And there's a peak too. So now we watch, right? Is it going to ride and go up? Look at all these resistance levels. That's what I'm trying to say, guys. I don't know what Bitcoin's going to do. Maybe it will turn into a gazillion dollars. Maybe it will. But what I wouldn't do is I wouldn't trade off of hype or speculation. I would draw and look candlesticks and trend lines and watch. Is price going to ride and break out when it starts hitting this resistance levels? Is it going to fail? Because look, it could easily go up here and it could break out, but you know what could it easily do? Trend lines, guys. Easily. It could easily go down to here. right? And where's the peaks and the valleys? Remember, connect some valleys. Oh, here's a big valley. Oh, look at that. That's weird. Why does that valley look right over out here? Jeez, hocus pocus traders, right? You traders don't know what you're talking about. That's all hocus pocus. Pretty weird how like these trend lines all match up. Pretty weird how that all works, huh? It's not hocus pocus, guys. Stuff works. Hey, yo, all right. Gotcha. Awesome. Cool. All right. So that's it, guys. I'm going to end it before an hour and a half. I didn't make the hour deadline, but it is what it is. Hopefully this stuff helps you guys. And I will catch you all later. Hopefully it helped you. And stay safe out there. And I'll do some more of these webinars for you guys soon. Enjoy.